Imagine this. You've got $1,000 sitting in your account, and you are wondering, should I just save it or make it work for me? Here's the truth. If you learn how to invest that $1,000 wisely, it could be the start of something much bigger. You do not need to be rich to start investing. You just need the right roadmap. And today, that's exactly what I will give you. Welcome back to Rich Map, where we help you make smarter money moves and grow your wealth. Let's get straight to it. When you hear invest in stocks, it might sound intimidating, like it's something only Wall Street pros do. But the stock market is not just for the elite anymore. It's open to everyone, including you. And starting with $1,000 is more than enough to begin building your portfolio. The key is understanding where to put that money, how to manage risk, and how to grow it over time. The first thing you need to know before you invest is why you are investing. Are you saving for a long-term goal like retirement? Or do you want to learn the basics and grow your money slowly? Defining your goal helps shape your entire investing approach. If you are a complete beginner, think long-term. You do not want to be chasing quick profits. That's risky and often leads to losses. You want to invest in assets that grow over years, not days. Now, before you put even $1 into the market, you need to make sure your financial foundation is solid. That means paying off high interest, debt like credit cards, and setting aside an emergency fund, around 3 to 6 months of expenses. Because if something unexpected happens and you have to sell your stocks quickly, you could lose money. Once that's in place, your $1,000 is ready to start working for you. Next up, let's talk about the best ways to invest that $1,000. There are a few smart options for beginners, depending on your goals and risk comfort. Option 1. Exchange-traded funds, or ETFs. These are baskets of stocks bundled together. So when you buy one ETF, you own small pieces of many different companies. They are perfect for beginners because they're automatically diversified, meaning your risk is spread out. For example, you could invest in an ETF that tracks the S&P 500, which includes 500 of the largest companies in the US. If the overall market goes up, your investment grows with it. Historically, the S&P 500 has averaged around 7 to 10% annual returns after inflation. Not bad for passive growth. Option 2. Individual stocks. If you have done your research and you are interested in specific companies, you can buy shares directly. But here's the key. Never put all your money into just one stock. Diversification is your safety net. For example, if you love technology, you might buy shares in companies like Apple, Microsoft, or Nvidia. But also balance them with companies in other sectors like healthcare or energy. Option 3. Fractional shares. Not everyone can afford one share of Tesla or Amazon, but fractional investing lets you buy a portion of a share, even with just a few dollars. Platforms like Robinhood, Fidelity, or Charles Schwab make this super easy. So, even if a stock costs $500, you can invest $10 or $20 in it. This is a great way to build a diversified portfolio, even when you are starting small. Now let's talk about how to invest strategically. One of the simplest and most effective approaches is dollar cost averaging. Instead of putting your entire $1,000 in at once, you can invest in small chunks, say $100 every week or $250 every month. This helps smooth out market fluctuations. You will buy some shares when prices are high and some when they are low, reducing your risk of poor timing. Over time, it averages out to a better entry price. Another powerful concept to understand is compound growth. This is where your investment earns returns, and then those returns start earning returns themselves. The earlier you start, the more powerful compounding becomes. For instance, if you invest $1,000 and it grows at 8% per year, after these years, it becomes around $2,150. But if you keep adding even small amounts each month, that number can grow exponentially. The secret is not just the amount you invest, it's how long you let it grow. Let's also cover the emotional side of investing. Many beginners panic when the market dips and starts selling in fear, but the market always has ups and downs. That's normal. Think of it like seasons. Winter does not last forever. The worst thing you can do is sell at a loss because you are scared. Instead, focus on your long-term goals and stay consistent. The best investors are the most patient ones. And here is something that often gets overlooked. Keep learning. The stock market rewards those who educate themselves, read books, follow trusted finance channels, and understand what you are investing in. Do not just follow hype or social media trends. Always do your research before putting your money in. When your portfolio starts to grow, it's also important to review it occasionally. Maybe once or twice a year. Rebalancing helps you keep your investments aligned with your goals. For example, if your tech stocks have grown a lot and now make up too much of your portfolio, you can sell a bit and reinvest in other sectors to stay balanced. And if you are still unsure where to start, consider using a robo-advisor. Platforms like Betterment or Wealthfront automatically invest your money based on your risk level and goals. They are beginner-friendly and handle all the hard work for you. Now, let's put this into action. Suppose you take your $1,000 and invest $500 into an S&P, $500 ETF, $300 into individual stocks you believe in, and keep $200 as cash for future dips or new opportunities. That's a simple, balanced way to start. Diversified, low risk, and build for growth. Remember, investing is not about getting rich overnight. It's about building wealth steadily over time. The earlier you start, the more time your money has to grow. Even small amounts can turn into something significant if you stay disciplined and consistent. So, if you have been waiting for the perfect moment to start investing, this is it. Do not let fear or confusion hold you back. The best way to learn is by doing, and starting with $1,000 is the perfect first step toward financial freedom. If you found this video helpful, make sure to hit the like button, subscribe, and turn on the notification bell so you never miss another money guide. I'd love to hear from you. Comment below and tell me what stocks or ETFs you are planning to invest in. Thanks for watching Rich Map, where we help you build wealth, one smart decision at a time. Until next time, keep investing in yourself, your future, and your financial freedom.